Hi, I'm Steve Kalan from NACD, and in today's BoardVision, we'll be speaking with Jay Rittberg. Jay is the Vice President of the M&A Insurance Group at AIG. Jay, thanks for joining us in New York today.
Thanks, Steve. It's good to be here.
So, directors, if you've had deals fail to close because the indemnification offered by the seller was not sufficient to cover the risk associated with doing the deal, and you failed to get representations and warrants insurance coverage to close the gap between what the seller offered and what you deemed necessary, then you're going to find this episode very interesting. This type of deal coverage protection has been offered in the marketplace for about 15 years, but it's become much more common. Jay, what's happened of late?
There have been many significant changes to the representations and warranties market. The most significant have been in the pricing, the underwriting process, and claims handling. On the pricing front, whereas 15 years ago, it might cost 5 to 10% of the limit being purchased to buy a policy. Now it costs as low as 2 to 4% of the amount being purchased. On the underwriting process side, whereas 15 years ago it might take up to a month to underwrite a deal, now we can write a deal in as short as a week. So deals are written faster and more cheaply.
Jay, you also mentioned the reps and warrants claims process. What's changed there?
Well, Steve, there have been some tremendous changes. Over the past 15 years, we've actually paid millions of dollars worth of claims. So if you're a corporation or a private equity shop considering whether the product works, you can see that it does.
Jay, even though many M&A transactions remain very complex, how has the deal coverage changed for the buyer?
In addition to this type of coverage matching up very well with what the buyer will receive from the seller under the acquisition agreement, it also has the benefit of enhancing the amount of coverage that the buyer will receive from the seller and extending the time frame of coverage that the buyer will receive from the seller. This gives buyers and sellers comfort that what they get from the insurance is much like what they would get in an acquisition agreement.
Jay, a lot of large companies have an international footprint, and one would think that would add some hurdles to M&A deal coverage, but that's not the case. Why is that?
No, that's right, Steve. While there are many more international deals occurring every day, rep and warranty insurance can be provided in many jurisdictions and is not a hurdle to coverage that is an international deal. We deal with many multinational companies, and directors take comfort in the fact that they can seek recourse for loss in a familiar jurisdiction like New York rather than have to chase down sellers in jurisdictions all over the world where the assets are located.
Jay, thanks a lot. This has been very helpful, and you've no doubt uncovered some facts that will help directors move forward on transactions and provide the type of risk oversight they're tasked with as directors. Thanks very much for your insight today. I'm Steve Kalan, and this is BoardVision.